The hidden power of mortgage leverage. And real estate investors control $1 million assets with relatively small down payments. And that's not hype, that's the core advantage of real estate investing. And it all comes down to one concept: mortgage leverage. And if you understand how to use leverage correctly and to your benefit, you can scale faster, preserve liquidity, and dramatically increase your return on equity. And if you don't, you risk overextending and getting squeezed by the market. So let's break it down for you. What is mortgage leverage? It's a good place to start. Mortgage leverage is the use of borrowed capital or debt you're taking out a loan to acquire real estate. Instead of paying all cash, 100% cash, you might only put down 20 to 25% and finance the rest. So here's an example. Say you're buying $1 million property, and with a 20% down payment, it's 200,000. So you're going to borrow 800,000. And now you control a $1 million asset with only 200,000 out of your pocket. And that's why leverage is so powerful. First reason it is that it amplifies returns. And when property values increase, your return is based on the full asset value and not just your cash invested. So, say your property increases 10%. And in the previous example, that's a $100,000 gain, whereas your investment is 200,000, and that's a 50% return, and not just a 10% return. And that's what we call cash on cash. 2, capital efficiency. Instead of tying up $1 million in one property, you can spread $1 million across multiple deals. So 1 million cash equals one property with no leverage, where 1 million cash equals 5 properties with 20% down. More doors, more income streams, more upside. 3, it's an inflation hedge. Debt is fixed or semi-fixed in the commercial space, but rents and property values often rise with inflation. And over time, inflation effectively reduces the real cost of your debt. 4, tax advantages. Leverage enhances your mortgage interest deductions, your depreciation benefits, and your cash flow after expenses. And this creates a powerful after-tax return profile. So let's talk about the risks of leverage and what most people can miss from that angle. And leverage is a tool and not a guarantee of any certain outcome. So cash flow pressure is something to think about. Higher debt equals higher monthly payments. And if rents drop or expenses rise, your margins can get tight fast and squeeze you. So that's one thing. 2 is there's DSCR constraints. So lenders evaluate deals based on debt service coverage ratio, or DSCR. And if the deal doesn't cash flow on paper, it's just not going to get approved. 3 is market sensitivity. So leverage magnifies losses as well as gains. So a 10% value decline is a $100,000 loss, and that's 50% of your equity that's gone. 4, structure matters more than rate, and this is where most borrowers can get it wrong. It's not about chasing the lowest rate, it's about structuring the loan correctly to give you flexibility. So think fixed versus ARMs, or interest-only periods, or prepayment flexibility, or lower reserve requirements, or exit strategy alignment. And structure beats rate every time. So let's talk about how smart borrowers use leverage. And the best investors think like lenders. And they'll ask, does this deal cash flow under stress? And what happens if rates rise? And is my exit strategy realistic? And they don't max out their leverage, they optimize it. So let's talk about some strategic use cases for leverage. Say first-time investors, you can enter the market faster, or for value-add deals, you can use leverage to boost internal rate of return. Or for DSCR loans, it'll help you scale portfolios. Or for commercial assets, it can increase your buying power. Or for cash-out refinances, you can recycle capital into new deals. Final takeaway on mortgage leverage is that it's one of the most powerful wealth-building tools available. It only works if you respect it. And the goal isn't maximum leverage. The goal is strategic leverage. And it also has to be aligned with your cash flow and your exit strategy. So if you structure it right, Leverage becomes your greatest advantage. And if you structure it wrong, it becomes your biggest risk. That, my friends, is it for the day. Please visit my website. I'd love to have a conversation with you. You can figure out how to get a hold of me there. But that website is billrapponline.com. Please reach on out. Have a good day. Look forward to talking to you.